It is time to say good afternoon to Amanda Lang, CTV News Chief Financial Correspondent. Boy, busy week in business, and it's not over yet. Amanda, let's start with the big story earlier in the week, the Bank of Canada interest rate decision, which I'm not sure a lot of people thought was a surprise. Perhaps a lot of people were hoping for a cut, especially given the fact that inflation numbers month to month went down. Were you surprised?
Not surprised, and you're totally right that the February inflation data really showed that the Bank of Canada has done its job. Inflation is under control as of February, but of course everything changed since then. The war in Iran means that there will be some kind of inflationary pressure. And what the bank said this week is it just doesn't know how much. So they're watching energy prices, and that shows up immediately. We've already seen it show up at the gas pump. So that's a price pressure on consumers. But the bank can kind of they say they look through it. They can kind of ignore that price pressure if it's short-lived, because that'll come and go. We'll absorb it, and it won't turn into prices elsewhere rising. And that's what it's watching. So if the conflict goes on for weeks or, dare we say, months, then the bank will start to pay more attention and, frankly, might have to hike rates in order to try to get some of that broader inflation under control.
Yeah, that's the hard part to navigate here, right? It's indecision, which we know markets hate, and we've seen the reaction over the past few days. Markets have really taken this on the chin. I know it's a lot to do with, obviously, the price of oil, but a lot to do with the fact that it's hard to predict what's going to happen literally in a week or a month from now.
It really is. And I mean, the troubling signs for our economy are also on the Bank of Canada's mind. So as we ended the year, we had kind of tepid growth. We're operating below what the economists say would be our output, our potential. And as we know, the labor market got a little bit soft on us. And so I'll put that all together, and you might actually have been looking for a rate cut from this central bank, to help stimulate growth. Now we might have inflation that the bank can't really control. It's not made in Canada. Sound familiar? We've gone through this before recently. Yeah. And so then you might see rates going up while we have a weak economy. And that's a worst case scenario. That's stagflation. That is just a really terrible set of circumstances. And I think everybody is still hoping, if the conflict in Iran is shorter lived, that doesn't come to pass. But that's kind of the fear in the world right now.
So to your point, for people who didn't follow along, the population story for Canada, and this has been very much, something that's been talked about for a while. Did we do too much then? Are we doing too little now? The numbers you're suggesting are not great, and we should be concerned.
Yeah, it's the first time we've seen population declines in this country. So we do know that immigration offsets our natural decline. We don't have a replacement rate in terms of our own demographics, and we don't give birth to enough children. We went, you can argue, a little bit too far in reining in inflation. If you thought that it got out of control in the last couple of years, the government's gone the other way, and so we've seen a real drawdown. Now, a couple of things happen. Everybody's been paying a lot of attention to so-called per capita GDP, right? Our country's total growth divided by the population. When we had huge immigration numbers, it looked bad, and it became a kind of a political talking point that the government wasn't doing well. Right. Well, now it looks good because we have fewer people, but fewer people means less growth. It's not good for our economy to see a shrinking population, and immigration does fuel growth. Short term, but long term especially. So it's a bit of it'll be interesting to see how the government responds to this and how businesses respond, because some of this is those permanent residents that they need for employment purposes.
Seems to me, as you describe it, it's very much a damned if you do, damned if you don't sort of scenario, isn't it?
I mean, a little bit. I think we could argue that, if we went too far in one direction of opening the floodgate gates without, the problem, of course, was never how many new Canadians we made. It was, did we have the structures to support them? Did we have the housing market that was going to receive them, and also healthcare, education, all the other services? So if you're pro-immigration, you would say, well, spend money on the other things so that we can actually absorb that. What we've done now is we've gone the other way. We've reduced international students drastically. We've reduced the number of permanent residents. We've clamped down on a lot of the existing programs. And so that will, in the short term, help some of those things. It'll ease the pressure on some housing, especially rental markets. But there's an economic cost. And so did we go too far in the other direction, which, I guess that's the way politics can work sometimes, right? There's sort of a snapback.
I want to ask something else, just to go back to the story, with the Bank of Canada holding rates steady. So oil has become obviously the big issue here. We've seen prices spike. Obviously, Canadians are feeling that in their pockets. People wonder, why is this affecting Canada when, in fact, we don't get much of our oil, or almost any of our oil, from that part of the world to begin with?
Yeah, I mean, oil prices are set globally, so it is an interesting. If this went on a long time, you might actually see an interesting conversation about, should North America price its own oil, since we tend to send our unprocessed oil or unrefined oil to the U.S. to have it refined and then shipped back to us. And so why do we allow, West Texas or Brent crude to be the price if, in fact, what drives the fundamentals of those markets? And both the U.S. and Canada are now, as we know, net exporters of oil. We produce more oil than we need. And so we shouldn't really be at the mercy, but this is the way global markets work. And we should remember that a high oil price is excellent for our oil producers. It's excellent for our GDP, right? About 10% of Canada's GDP will be driven by the price of oil and related kind of energy prices. And so there is an upside benefit to us if we can kind of offset the pain that comes with it at the pump. There's a sweet spot that we might find. And so the higher oil prices, it's not all bad news.
Yeah, so all the oil that we produce, as you said, unrefined, not bringing the price down at the gas pumps for Canadians, though, at the end of the day. Have we ever looked at this? You bring up a really interesting point, the fact that we could be refining this on our own instead of shipping it out and getting it back?
Endless debates about this in the course of our history. And I'll tell you, one of the reasons why we don't refine oil is it's a crummy business. It's a really low margin business. And so we've let other people do it. There might be, in our new way of thinking about things, a case to be made for refining. We should remember, we do refine on the East Coast, the Irving Oil Refinery, and there are some other pockets of refinery across the country. We just don't do much of it. Could we do more? You will see that debate revived, but at the end of the day, investors have to believe in it, and they tend not to love it as a long-term investment. It's expensive to kick off. The margins are reasonably low once you get going, and so we've been happy to let other people do it. Maybe we'll change our minds, especially with the U.S. behaving the way they are.
So last thing I want to bring up, we heard a U.S. Trade Representative, I think it was yesterday, Jameson Greer, talk about the fact that negotiations with respect to CUSMA are going well with Mexico, and then pointing out, making a point of saying, but not so much with Canada. We had J.D. Vance. There was a question about the Gordie Howe Bridge and when it would reopen, and again, kind of playing up this point about how badly Canada has and continues to treat the U.S. Where do you think this is all going? I mean, is this posturing?
It's probably a bit of posturing. I mean, it seems clear that the U.S. decided to start with Mexico. We've seen before a bit of playing off one against the other. I think we can probably just stay cool and wait our turn for whenever we become the focus of the talks, and not get too distracted by what is said publicly, because there is a lot that's said that isn't reflective of what's going on at the level that matters, which is kind of the governor to premier level, if you will, where real business happens. So we're a little bit behind in terms of when the talks will begin, but I would say we won't really know what's happening until our actual negotiations are happening.
Whenever that may be.
Whenever it is.
Yeah. Amanda, thank you so much. Appreciate it.
Great to talk.
Unmistakably Canadian.
It's the music that raised you.
The artists raising the bar.
Hi, this is Brian Adams.
Hey, my name's Brett Emmons. I'm from the Glorious Sons.
Hi, I'm Nelly Furtado.
Made in Canada. The station that champions Canadian music.
Loud, proud, and all yours.
No passports required. Just press play.
Tap into Made in Canada now on iHeartRadio.ca
Or the free iHeartRadio app.